Are you ready for a shocking turn in the UK pension system this November? Major updates are on the way, and they might hit your pocket harder than you expect. From winter fuel cuts to a massive £800 million in underpaid pensions, and even new tax shocks. This is not the kind of news retirees were hoping for, but knowing what's coming can help you prepare, protect your income, and make smarter financial moves before it's too late. Welcome everyone. In this video we're diving deep into the UK pension November 2025 update. LL uncovered everything. The governor these senti, telling you up front, if you rely on the state pension, or if you're nearing retirement, this video could be one of the most important ones you watch this year, so stay tuned right to the end. Because ILL explain not only what is changing, but also what steps you can take to minimize the impact of these cuts and new tax burdens. Let's begin with what's grabbing headlines. The winter fuel payment cuts. For decades, the winter fuel payment has been a financial lifeline for millions of pensioners, helping them manage soaring heating costs during the coldest months. But this November, the government has confirmed a major shakeup in eligibility. Nearly 1.6 million pensioners across England, Scotland, and Wales are expected to lose full access to the benefit, while others will see their payments reduced. Officials argue the cuts are meant to target those most in need, but critics say it's another blow to vulnerable seniors who are already facing record energy bills. The change means many middle-income pensioners, who were previously eligible, will no longer receive the full winter fuel payment. For example, a couple over 80 used to get up to £600 under the scheme, but with new eligibility limits, they might now get only half of that, or even nothing at all, depending on their total household income and benefit status. The government insists this is part of a broader effort to reduce spending. But to many, it feels like a quiet rollback of long-standing support for pensioners. Now, here's where things take an even deeper turn. The £800 million in pension underpayments. The Department for Work and Pensions, or DWP, has recently admitted that thousands of pensioners, mostly women, were underpaid for years due to calculation errors, administrative delays, and system flaws. Many of these cases involve widows, divorced women, and individuals over 80 who should have received automatic uplifts to their pensions but didn't. The total underpayment figure has now reached an astonishing £800 million, and some experts believe that number could still rise. According to reports, roughly 170,000 pensioners are due back payments, with some individuals owed tens of thousands of pounds. The DWP has launched correction exercises, but the process is painfully slow. Pensioners are being advised to check their entitlements and ensure they're not missing out on what's rightfully theirs. In some cases, families of deceased pensioners can still claim these unpaid amounts, but only if they act within the legal window. Imagine being retired, struggling with bills, and then finding out the government owed you thousands for years. It's not just about money, it's about trust, and that trust is wearing thin. Now let's move on to another serious issue, the tax shock that's coming in 2025 to 26. Many retirees who once believed their pensions were tax-free or lightly taxed are in for a nasty surprise. The government's decision to freeze income tax thresholds until 2028 means that even a modest increase in pension payments could push more pensioners into higher tax brackets. This so-called stealth tax is expected to generate billions for the Treasury, but will quietly erode the real value of pensioners' income. Here's an example. The full new state pension in 2025 is expected to rise to around £233 per week after inflation adjustments. If you add in a small private pension or some part-time income, you could easily cross the personal allowance threshold, meaning you start paying income tax. What was once a comfortable sum now risks being diminished by frozen thresholds and rising living costs. Experts are calling this the tax creep effect, where pensioners end up paying more in taxes not because they earned more, but because the government failed to adjust the thresholds in line with inflation. In real terms, retirees could lose hundreds of pounds annually, making it harder to cope with higher food, energy, and healthcare costs. I hope this breakdown has given you a clearer picture of what's ahead. It's crucial to stay informed and proactive. Thank you for watching. If you found this video helpful, please give it a thumbs up and subscribe for more essential updates. See you next time. Big changes are coming for UK pensions, and what you don't know could cost you thousands. November 2025 is shaping up to be a critical time, and today we're breaking down exactly what's happening, why it matters, and what you can do to protect your retirement savings. The real worry isn't just about one single change. It's a perfect storm brewing. The Bank of England predicts inflation will stay high, around 3%, well into 2026. That means essentials like your weekly shop and petrol will remain expensive. Now, add reduced winter benefits and higher taxes into the mix, and you can see why pensioner hardship is a major concern. The government keeps pointing to the triple lock, which guarantees the state pension rises by the highest of inflation, wage growth, or 2.5%. For 2025, that increase is expected to be around 4.8%. That sounds great on the surface, right? But here's the catch. When you factor in the frozen tax thresholds and cuts to other benefits, those gains start to disappear. It's a classic case of giving with one hand and taking away with the other. Let's make this real. Imagine you receive the full new state pension of £233 a week. A 4.8% increase gives you about £11 more weekly, which is roughly £570 over a year. But if that extra income pushes you over the tax-free personal allowance, you could lose around £100 to £150 of that gain, straight back to the taxman. And that's before we even talk about higher energy bills and reduced winter fuel payments. For many, this means they could actually end up worse off than before. It's no surprise that charities like Age UK are sounding the alarm. They're warning that thousands of older people could face fuel poverty this winter, unable to afford to heat their homes properly. They're calling for urgent government action, like restoring the full winter fuel payments and sorting out the massive backlog of pension underpayments. And that brings us to another huge problem. The delays at the DWP pensioners are reporting waiting months, sometimes even longer, just to get answers to simple questions or have their payments corrected. Tragically, some elderly individuals have passed away before ever receiving the money they were rightfully owed. The government says they're accelerating reviews, but for many families, progress feels painfully slow. So, what can you actually do about all this right now? First, check your pension records. This is vital. If you suspect you've been underpaid, especially if you're a woman who retired before 2016, or have had a change in your marital status, contact the DWP immediately and ask for a pension statement and a review. Get all your documents together, like your national insurance records and any benefit letters you have. Second, start planning your tax position now. If your income is getting close to the tax-free threshold, look into smart ways to manage it. You could time withdrawals from a private pension or use your tax-free ISA savings. A quick chat with a qualified financial advisor could save you a lot of money and stress by helping you structure your finances more efficiently. Third, make sure you're claiming every single benefit you're entitled to. So many pensioners miss out on things like pension credit, housing benefit, or council tax support, simply because they don't apply. Getting even a small amount of pension credit can be a gateway to other valuable help, like the warm home discount and a free TV license if you're over 75. And fourth, stay informed. The pension landscape is changing fast, and every little update can make a big difference to your bottom line. Whether it's a tweak to the triple lock or a new tax policy, being in the know is your best defense against losing out. As we head into another tough winter, the message is clear. Pensioners need to be alert, proactive, and informed. These policy shifts show just how much small changes can impact your daily life. While we hope the government steps up to provide real support, you can't afford to wait. Please share this information with your friends, family, and anyone you know who might be affected. If you found this breakdown useful, make sure to follow our channel for more updates, because November 2025 might just be the beginning of even bigger reforms. And remember this, your pension isn't just a payment, it's a promise. A promise built on a lifetime of work and trust. Every pensioner deserves to see that promise honored in full. Thanks for watching. Stay strong, and let's make sure your retirement stays secure.